Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back for the market for the week of the 31st of January until the 4th of February. Now before we get started, please know that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products or instruments, and whether you use any kind of trading strategy. Any information that relates to past performance is not indicative of future results. Now, for all of you tuning in for the very first time, in today's look back, we're going to be covering stocks. Now, with stocks, we have the Q4 of last year earnings season in full swing. And it is essentially the period where major corporations come in and announce the results of the most recent financial reports. As we mentioned in last week's Outlook, for this week we had Google, Meta Platforms, and Amazon being some of the major companies reporting their figures, which they did so on Tuesday, Wednesday, and Thursday, respectively. So we're going to get started by looking at Google. Now, Google had a very strong earnings report. In the meantime, I'm also going to pull up the chart so you can have a look at the same time as well. And I'll just keep it on the weekly time frame for now. So it had a very strong earnings report, beating both the earnings per share and the revenue expectations. Now, the EPS returned a strong result with the difference between the expected and actual figure being at 10%. Meanwhile, the actual revenue figures beat the expected figure by 4%. Now, the earnings report was released during the after hours of Tuesday's close. This means that after hours is basically the New York Stock Exchange closes at 4:30 Eastern. So there's also this period after the session closes where there's still some trading going on. And this is basically when we also had the release of the figure. So it took place after the close of Tuesday, and we saw the very next day. So if they're reporting their numbers after the close, then we're likely going to see the impact on the very next day, which we did see. And Google's share price basically gapped up by as much as 7% on Wednesday. So if I switch this to a daily chart, we can basically see right here the difference with regards to the surge. And like we said, if we measure this from the close to the open being right up here, it rose by as much as 7.5%. Now on the week itself overall, it rose as much as 13%. So if I switch this to the weekly time frame, if we measured all the way up here at the high, which basically came to retest the highs from a couple of weeks back, it rose by 13% before it retraced back down, finishing at 7%. Now, Google's results were also so positive, which meant that at least 9 Wall Street firms raised their price target on the stock, as per a CNBC article. Now, 2 of the main revenue streams for Google were, of course, its ad revenues, as well as the company's cloud software, which reported growth of 45%, which is a pretty significant figure for a company the size of Google. Next up, we're going to be looking at Meta Platforms, which was also formerly known as Facebook. So I'll just pull up the stock so you can have a look at the price action as well as the earnings. Now, it was a very different story for Meta, who reported its figures after the close on Wednesday. So just like Google, it was after the close, but this was on Wednesday. So again, we could be seeing the impact at the open on Thursday. Now, while it beat its revenue expectations by only a mere 0.9%, it missed its earnings per share expectation by 4.41%. So on the very next day, with the open, you can pretty much see what happened even without even saying anything, just by the gap of the price. We can see that on the very next day with the open on Thursday, share price plunged by a whopping 25%, or $75, which if I zoom out, you'll see that it basically brought it back to its 2020 or even mid-20 levels. Now, Zuckerberg's wealth also dropped by at least 30 billion, while Meta itself suffered a 230 billion wipeout, which makes it the biggest one-day US stock plunge in history. Now, the main reason cited for the drop in price was the fact that the company reported its first ever drop in daily user numbers, as well as its advertising model being hit hard by Apple's privacy changes. Facebook said that it expects that this, with regards to the privacy changes, it will cost them billions coming in the future. On the week, the stock dropped by as much as 21%, so we can pretty much say overall that this was definitely a week that Facebook investors would like to forget. So I can just measure it here from the close of last week to the very bottom. You can see it was pretty much a bit more than 21%. Now the last stock that was reporting its figures, which was always obviously one of the biggest companies as well, it was Amazon. It did so after the close on Thursday. So again, with the expectation being the impact showing with the open on Friday. Now, while the company missed the revenue expectations, it was only by 0.2%, but it beat its EPS by an astonishing 668%. And even I was surprised by that because it's the very first time that I saw this much of a deviation between the expected and the actual figures. So I'll just pull up the chart for Amazon as well, so you can have a look at the chart and the impact of the earnings report. So again, the figure was reported after the close on Thursday. So right here we can see with the open on Friday, essentially the impact that it had on the share price. Now it gapped up by as much as 12% or $330. Now its profits also surged to 14 billion, while it also announced an increase in the price of Amazon Prime membership to compensate for rising operating costs. And additionally, the company had its most successful Black Friday and Cyber Monday weekend as sellers sold an average 11,500 products per minute. Now overall on the week, if I just switch to the weekly time frame, we can see a pretty strong move with regards to its share price, finishing up the week by 9.5% or $272. Now we're going to move on to the FX market. Last week, the major event was, of course, the NFP report, which came out on Friday, as well as the interest rate decisions in the EU by the European Central Bank and the UK by the Bank of England. Now I'll pull up the chart of the euro dollar just so you can have it in view while I talk about the major events. Now, the NFP showed a very positive figure with the expectation being 150,000 jobs to be created, whereas the actual figure came in at 467,000. This saw the euro dollar dropping by as much as 0.33% or 37 pips at the time of the release of the figure, whereas the pound dollar fell by 0.28% or 38.5 pips. Now, if you want to look at the actual impact of the NFP report, you can of course switch to the 30-minute or like an intraday time frame is what I'm trying to say. And you can see here at 1:30 London time was basically when the figure was released for the NFP, and we can pretty much see the price action and the volatility that comes into the market during that time. The same thing applies if I switch to the pound dollar this time. Again, we're sticking to the 30-minute time frame. At 1:30 is when the report comes out, and we can see the strong drop. As we said, the pound dollar fell by 38.5 pips. Now, with regards to the interest rate, just to highlight the significance of these events, the pound dollar printed an 85 pip range on a 30-minute time frame again at the time of the event. So if you scroll out, you'll see basically this was a candlestick where the interest rate hike was announced for the pound for the UK, and we can see the range measuring from the low all the way up to the high. This was an 85 pip range, so definitely something that could have presented a lot of opportunities. Now on the week, both the euro dollar and the pound dollar ended the week in the green. The euro dollar enjoyed a strong rally, finishing the week up by 2.7%, So again, switching back to the euro dollar, and now onto the weekly time frame. So yeah, on the week it rose by 2.7% or 305 pips, while the pound dollar rose by 1.05% or 140 pips. As far as the actual rates, the European Central Bank kept the rate at 0.5%, while as we said with the UK, it rose its rate by 25 basis points to 0.25%, as it was also the expected figure. And again, talking about these events is something that we keep repeating, but again, for the people joining in for the first time, you can find them by going onto the homepage of tixee's website. And at the very top, you will be able to see the different tabs that you can use. The one we're looking at is the education and research. To scroll down to the economic calendar and just wait for the page to load. And it's a good way for you to just keep an eye on the major events that are taking place in case there's one specifically that you want to trade. Again, here you have a bunch of filters that you can use, but what I like doing is filtering by the highest impact. And, you know, by scrolling down, you'll be able to see, you can use, for example, this week, and you'll see starting from the 31st of January, and you can see the highest impact events here. And if there's one specifically you want to trade, you can do that. You have the different columns here showing you the forecast versus actual figure, as well as the previous one. So again, you can find all of these on tixee's website. So yeah, this is with regards to the FX market. Now, moving on to gold, there wasn't much action going on throughout the week, as we still await any additional reports and updates with regards to the tensions between Ukraine and Russia. Now, I'll pull up gold, the chart of gold as well, and switch on to the daily time frame. Now, gold prices, they did finish the week in the green, but they only traded between a $30 range. So if I actually put it on the weekly time frame, you'll see that the size of the candlestick wasn't that significant. As I said, it was a $30 range. Prices are trading if you want to add some indicators as well. So in this case, I'll just add the moving average. Again, you have a bunch that you can choose from, and you can also change its settings. So for this one, you can just right click, edit settings. I'll set it to a 21 exponential. And I will also add the RSI. And this one I'll keep it to the default, but again, you can always change the setting to the one of your liking. So as we said, we can see the prices are pretty much trading on the dot right on the 21 period EMA, and the RSI is pretty much at the halfway mark with a reading of 51. So you can see a little bit of an indecision with regards to prices, again, as we await any more updates with regards to Ukraine and Russia. And lastly, we're going to be looking at oil. So I'll just pull up a chart for this one as well. Now, oil extended its rally. I'll just zoom in a bit here. It extended its rally, recording a 7 consecutive week in the green. We count here 1, 2, 3, 4, 5, 6, and now we're on the 7th consecutive week in the green. Oil inventories also showed a decrease in supplies. Again, this one being the main event for all inventories taking place on a weekly basis, usually on Wednesdays, sometimes on Thursday, if, for example, you have a holiday on Monday. So yeah, a decrease in supplies could have certainly been a factor to the additional rally, with another potential factor being the uncertainty of the situation still surrounding Russia and Ukraine, as we also mentioned earlier on with gold. Overall, on the week, oil prices rose by 5.4% or $4.70. With regards to the technicals, we can see how far away it is now from the 21 EMA. Obviously, the question is, when is this rally going to end? And if it does so, how violent is the retracement going to be back to the moving average, and whether it's going to be able to hold? And we'll see prices bouncing higher, or whether it's going to drop lower. The RSI, again, depending on the levels that you said, but if you're using a 70 and 30 as the two extremes, it is now showing an overbought reading. But again, obviously it depends again with the settings that you're using. If you're using an 80 level, then obviously it still hasn't printed an overbought reading. And there you have it. This is as far as the look back and review for this week. I hope you enjoyed the video and found it useful, and I'll catch you all in the next one. Until then, trade safe.